Oh, Microsoft, you bought a nuclear power plant and a bunch of gas turbines? Yeah, congratulations. You're a utility now.
Hello, everyone. Welcome to another episode of The Circuit. I am Ben Beharan.
Greetings, programs. I'm Jay Goldberg.
That was like my attempt at the call transcript narrator guys tone, which people remember I had as an intro once to The Circuit. Very good, very good. Okay, Jay. Before we start, I want to share with you a random statistic. Are you ready for
All
this?
right. Mm-hmm.
Did you know that in a NVIDIA NVL72 rack, just one rack is 2 miles of copper? And you
Okay.
wonder why we went there is because Ben all of a sudden started like reading commodity notes on copper and silver and mining and whatnot because people were like,
Yeah.
copper's through the zoo, nickel's through the zoo. But also for some work I'm really obviously doing in networking on the back end. But there's another statistic I want to share with you that I came across, actually came up with, but using Meta's deal with Corning, for fiber,
Mm-hmm.
right?
Yeah.
That is roughly 8 miles of fiber, which would equate to almost 1%. Sorry, 8 miles? Eight.
No, it's like you need some more zeros there.
800 miles? Sorry, hold on. Let me pull. I was about to do this by memory.
It goes
8
around the
million
Earth.
miles. It's 8 million miles of optical
Yeah.
fiber for Meta's campus,
Yeah.
which is just shy of 1% of all fiber that Corning has ever produced. Ever.
Yeah. Yeah.
Wait till we shift to fiber and optical, everybody, to some degree from copper. Okay, there's Ben's random stats of the day with a slight memory gap of Ben's second cup of coffee not hitting. All right, let's jump into it. Let's start. There's a lot of stuff to go through. Let's start with Nebius's earnings because there's a couple things that we want to keep coming back to. We just had all the hyperscalers. Whether or not people put Nebius and CoreWeave as hyperscalers, fine. Although I have seen that their CapEx numbers have been put into the CapEx of the hyperscalers to take that number to north of 700 billion in CapEx this year. So fine. But we watched this very closely because really, and I think we've talked about this before, outside of Amazon, Microsoft, and Google, with to some degree Oracle, which we debate, are they a hyperscaler or a Neocloud? There's really only a couple people after that who have any opportunity here. CoreWeave, Nebius is the short list. After that, I think it falls off a cliff of anybody able to run software workloads. We could debate IRN, but that would really be it. Everybody other than that, I say, is
Crusoe and Lambda probably go on that list somewhere in the middle. Like,
yeah,
it's like
yeah.
but like, but they're on the sort of they're on in the gray zone, and then everyone it falls off pretty sharply after that.
Okay, but I will go back to kind of the fundamental point here. Why, when Nebius has earnings, when CoreWeave has earnings, when these companies that we are putting under a microscope have earnings, because it's insightful to both expansion and contracted wattage, which we know and want to track, how they are monetizing that. And as you and I were texting earlier in the week, there's a good degree of this that requires them be very good at math. And you're either good at math or you don't. And that could be literally a fail, in the overall business if they're not. So they got to be good at the maths. But I look for commentary or signs that they are getting growth dollars outside of the hyperscalers at any scale. Because if the hyperscalers, I just don't know how long-term sustainable it is that the hyperscalers keep using them for infrastructure as they get their own, expansion capacities, whether that's by leased or self-built in their own data centers. So my long-term sort of view is on the neoclouds, namely in this case, fine, put Lambda in that, but the whole bucket is they need third parties who aren't named Microsoft, Amazon, and Google to bring them workloads to sustain this over the long haul. They can't just be, GPU renters and GPU workload tenants or landlords for the hyperscalers. So that's why I look at this with this lens. We don't know the answer to that question yet, but I don't think that's sustainable long term if they don't get their own customers.
Okay, there's a lot to unpack on that. I have spent a lot of time this month in December thinking about neoclouds. I'm working on a thesis coming soon, but I'm starting to get a better grip because you're right. You hit the main questions, right? Nebius's revenues, I forget the exact numbers, but they go from like hundreds, a couple $100 million last year to
Yeah.
I think the revenue is 3 billion this year. I mean, just like giant spike, and that's Meta, a little bit of Meta, and a lot of Microsoft, right? But the Microsoft deal is a 5-year deal, and what happens in 5 years who doesn't even matter. Like so far in the future, right? But eventually, assumption at some point that Microsoft revenue will taper off, and then the question is, what else will be left when that revenue goes away? And I think you're right. There's very few companies who can really build a cloud computing business, a public cloud. It requires a lot of capital and a lot of technical ability. I think there's a very small group that can do that. I think CoreWeave and Nebius both have credible claims to having serious internal IT capabilities and software capabilities. CoreWeave seems to have just built it from scratch and hustle and deep knowledge of NVIDIA's stack, and Nebius has built it because they used to be Yandex, and those are some serious engineers they brought over.
Yep.
But it's a really interesting question, and Nebius talks about this a lot. They're very open about like they haven't they'll everyone wants to ask them how's their Microsoft business doing, how's it ramping, when's the spending gonna hit, all those complicated sort of tactical questions. But Nebius on their calls always goes out of their way to talk about their, what do they call it, their AI, their cloud business.
Yeah.
I forget how they term it. It's like their AI business and their cloud business, which is not totally clear, but they have a public cloud computing business, and it is gaining customers, and they're building out a developer platform. They just bought a company last week that is called Tavaly that does agentic search and whatever that means, but it's basically a developer tool for building agents on top of AI models. And like they're conscious of it and building it out. CoreWeave is a little bit further behind. They just hired a CRO who came out of Amazon. They hired him about like 6 months ago. So they're aware of it too. They have much bigger upfront contracts to contend with, a lot of them, and that's a lot of their time. But I think they're building something. How this all plays out, I think, is an open question. I know that there's a lot of skepticism on the street about it, just not just the street, but in the world about these models.
Yeah.
I in my mind, I have a scenario in which they could last longer. Their business is going to change a lot, though, right? And
yeah.
The example I keep coming back to is it's like a boa constrictor eating a pig, and right, it's just this giant bulge in the middle of their revenue stream, which is these mega deals, and then it tapers off. It starts steep up and then tape and sharp down, but there is a long tail out there, and so I don't want to be. I don't think anyone knows, and I'm on the middle. Like I think it could go either way. And I'm just talking about their business prospects. Like the stock is. I'm not commenting on that, and it's confusing anyway.
Right.
But there's definitely the business itself. How sustainable is it being an IT provider for Microsoft when Microsoft could probably do it themselves? That's a big question they're all struggling with.
Yeah. Yeah, and I think when you just look on the two factors of this, which is part of this debate that I actually think is really interesting, which we won't necessarily get into here, but at another episode, just the idea that these very big companies, namely the hyperscalers, are turning into, to some degree, more heavy asset types of businesses, not just asset light. And what does that mean now in these economics? And really, and then again, right, I think you see this debate coming up now frequently is like, is that just the new way of things, right? If you just control the rails and the power, and then you monetize it because you're one of a handful of people who can do it. But the economics are, again, like we keep talking about this, a very thin needle. In fact, I don't know if you saw it, but Dario Amode, did I say his name right? Amode was on Dwarkesh's podcast, and I was listening to it, and he basically goes on this whole sort of rant on, if you're off by really $100 billion in sort of the size of this TAM and revenue, it's like it will bankrupt a lot of these companies. Like how precise you have to be. Now there's the flip side, which is maybe you undercalled it, fine. But the reality is like, and that's why I keep coming back to the maths have to math, and you got to be very good at that, or you do risk taking on too much debt, not being able to monetize it over time. And people throw this stat out all the time, which I think you had also done some of the research on this, is that the numbers basically suggest that it's going to take CoreWeave 10 years to turn a profit. And it's like, fine, we get it, it's going to take a long time, but we get it, infrastructure costs, but the revenues on top of that have to make sense. And I think that's this weird tension when you look at everybody's back end, right, of now adding high fixed costs to their business model.
Yeah. Congratulations. Now you're a regulated utility.
Exactly what they want to be.
Oh, Microsoft, you bought a nuclear power plant and a bunch of gas turbines? Yeah, congratulations. You're a utility now. It's interesting to watch. And I'll tell you, like, I'm increasingly aware of there's a lot of noise. Oh, headline. There's a lot of noise about AI right now. No, there's a lot of noise about all the shortages. We've talked about it a lot, and everything's in tight constraint. But I'm also becoming aware that there is a lot of double counting taking place. And like for instance, you were talking before about like we're adding up all the capex for next year, right? And for this year. And do you add Nebius and CoreWeave into the list of the hyperscalers, right?
Right.
Nebius said they're going to spend about $20 billion in capex, give or take, this year. But most of that's going to support Microsoft. So then, is that included in
Right.
Microsoft's numbers too, right? And that's a small example. I think there's a lot of problems around like the electrical capacity, right? You add up all the gigawatts people say they're going to build. I think in reality, we're not going to build all of that. And it's like everybody goes out and says, "Hey, I've put in a bid on this parcel of land that has an electrical whatever capacity." 5 other people bid on that. They all include that in their forecast too. Nobody's definitively won it yet, but that it gets added up. And so I am, and I see this a lot, and I think where it really is going to play out big is with the model builders, foundational models. I don't know, like I certainly believe that there is going to be a massive TAM for whatever AI becomes. I don't know if that all accrues to evenly the way it's divided today, or if it just goes to one and the others zero out at some point. I think there is a risk of in some of these categories where there's going to be network effects that sort of lead us to one winner in some big categories. Not on the electronic side, but on the software side and the service side. That like yeah, I mean all these companies are they're 10 companies. One of them's worth a lot of money.
Yeah.
The other 9 are not, and so but nobody knows which is which.
Yep. Agreed. So Nebius was sort of up. I think it was 9-ish% on the week. I think there was a somewhat positive reaction, but what were any of the key takes from them? I mean, it's interesting having them sort of come right after most of the hyperscalers of the last few weeks, and it's got like back and forth in the debates about who they are. In fact, it was interesting. Morgan Stanley initiated on them, I think, end of last week. So clearly, more people starting to add to the coverage universe. But anything stand out that they said on from the numbers or on comments?
So Nebius missed consensus for revenue and for the guide, and they missed consensus for EBITDA, but the stock was up.
Yeah, I saw that.
Yeah, and one what I think what people really latched onto was they actually on some of the bigger things that matter is they're pretty positive. I think they raised their EBITDA forecast for the year.
Right.
They raised their ARR, their revenue forecast for the year. They raised their contracted electrical capacity for the year quite significantly from 2 to 3 gigawatts. That's a lot. So I think that matters a lot more. But also, having spent a lot of time with the Nebius financial model, I don't think anyone knows how to model it. I don't think they know how to model it. It's just so
Yeah.
many moving parts. Like one of the big, they actually got a question about this on the call. Is somebody asked, what metric should we follow? Should we follow revenue or ARR? And like ARR, was annual recurring revenue, is a hokey metric by Wall Street standards. That's a startup method,
Right.
right? You
Right.
sort of you take your best month and you multiply by 12. That's your ARR. And so I think a lot of us are uncomfortable with using pro forma EBITDA, pro forma EPS, and ARR as the core metrics. That's not something Wall Street analysts like to do. But Nebius management made a good point. They said, "Look, we're in hyper growth, right? The revenue grew 400% this quarter, um, and so when you're in a hyper growth like that, ARR matters much more than revenue." And I think that's a fair point. And I think for the moment, the street's willing to look past that. And that's certainly what the stock price performance seems to be indicating. But man, their numbers are all these numbers. It's just like it's really hard to model.
So back to my point though, like I looked at Dario's points. You and I were talking a little bit about, some use cases, you know, canaries in the coal mine or ghosts of Christmas past, as we called from, the networking days when overbuilds, were driven by some people who were just very bad at math. And I'm not discounting that, CoreWeave has good software. I think they do really, right. They're running on the same hardware as Nebius, right? There's not a lot of hardware differentiation. I think Nebius claims they have some, and I'm not unclear on what that is. But how much of this, and let's just bucket everybody else we talked about too, like Lambda, maybe Iron, like how much of this just comes down to really having a good handle on the economics, like the math, because that to me is like make or break given some of the examples, right, we've talked about in Ghosts of Christmas Past.
So certainly when it comes to, I'll use CoreWeave as an example. CoreWeave goes out and tells people that one of their core competencies is financial engineering. Again, not a thing that we love to hear in this sector, but to their credit, they are very good at it. They've been able to do some pretty impressive financings, get them done, and I think for all these companies, they're able to do pretty. They have the advantage of having all when they do the equations to figure out what it's all worth. There are not a lot of unknowns, right? They know the customers, they know what the price is. These contracts all come with sort of multi-year contracts with prices built in, and then they just sort of have to figure out what it actually costs them to run it, and right. And I think that goes really well. I think, but there is a real risk that, well, there's lots of risks in that. Will that contract really be unbreakable? Does Microsoft get bored in 3 years? Does OpenAI
Right.
stay in business in 3 years? Like, who's really be at the other end of that contract? So there are real risks there, and it's weird for me for Dario to say that, right? He runs a software company, and he I I'm not quite sure what math he's looking at. I imagine for him, his math must be very, very, very risky because the equations have a lot of unknowns. What is demand going to look like,
Yep.
right? And nobody knows. I mean, if you look at like Anthropic's revenue, not its revenue runway, but its growth in revenue, like this month or this quarter is just like off the charts. A huge, huge increase in new users because of Cloud Code. And I get it. I use Cloud Code a lot lately. It's very good, but right tomorrow, OpenAI could come out with something
Yep.
even better,
Codex
right?
is pretty good from what I hear from OpenAI. So yes, it's
Yeah,
competitive.
yeah, and right? That's just like this is there's a lot of unknowns there, and so yeah, if you overbuild for yesterday's software and somebody comes out tomorrow with something better, like again, this is where I'm coming out with all this. It's all there's a lot of like I'm gonna have five companies all say they're gonna have 80% market share, and it doesn't work out that way. There's not enough room for everybody. But on the flip side, like if you have a competitive offering here, now's the time. Like take your shot.
Yeah. 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 I mean, again, it just comes back to having a real firm grasp on their economics. Obviously, I think the margins are not great, not the best for your Nebius and your CoreWeaves of the world. They're not terrible. I've seen estimates from like 18 to 25%, right, give or take. It's not bad, like yes, but you really do need long-term contracts, right? You need people in this for the long haul in order to guarantee your capacity, and you need some value on top of that, right, to not be commoditized by somebody else and or the hyperscalers, again, workloads as they up capacity. So this is one of those weird things where it's like, you know the next 12 to 18 months, right, feels okay. It's very hard to say much beyond that. I think we talked about this a few weeks ago, like sort of always going to be in a 12 to 18 month somewhat visibility. It's murky, but at least it's not dark. um but these, I mean, the whole market, I think, is just reacting, correct me if I'm wrong, to just these insane capex numbers, and people are like, it's really uneasy.
Dude, I live in the stock market. 12 to 18 months is I can't see what's going to happen tomorrow. Like stock market had a few moods this week, so
It had lots
it's
of moods, actually.
you
Just
actually posted on this on the diligence stack. I thought that was a really really good post, which was the mismatch between the timing of technology and the timing of capital. Those two things are in very different clock cycles right now,
yeah,
and
yeah,
I does not feel like the capital markets are going to last as long as the technology cycle is.
yeah. I think that's the growing consensus. Despite, again, what feels like great fundamentals, turning our attention to applied materials earnings, which was very very interesting, where they talked about their business obviously being largely driven by memory. If folks will remember, right, we talked about this inflection point a couple weeks ago, where we talked about WFE, and my point being that as you move to new process nodes, there's less usability in tools, and as you move to more processes, generations or masks, if you will, right, per layers, all of that becomes more dense, requires more tools, requires automation, which just means greenfield growth for wafer equipment. And applied materials sort of said a lot of the same stuff that I had been saying about these inflection points. But again, you're sort of up against, if WFE is 130 billion plus, this year, which is what most people think it is. They didn't want to give a number, but most people are teetering into that area because of greenfield clean room. One, use existing process, or use existing square footage to bring in new materials, and then do greenfield builds, which is what they basically said. This is going to be stronger to the second half of this year. They're seeing that demand. They're pointing out, right, all of that demand. They're saying their customers, right, are saying the same things. And as we talked about with memory, it's really ridiculous what's going on with memory. So a lot of I mean, like, sometimes I kind of like, how do you explain like applied materials? And so I sort of think it's like, you could use the analogy, they're one layer down than the picks and shovels, right? They're part of the materials that someone uses to go make picks and shovels. Um, but it's very, 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 very interesting, even the demand signals that they said coming off the strength of this year and going into next year, um, especially again around just structural shifts in DRAM, HBM, all of those things is benefiting AMAT.
Yeah. So AMAT reported what yesterday? Today's Friday the 13th, February 13th. They
It is
reported
the 13th.
it
Yes.
is. So they reported yesterday, and their numbers are just bonkers. Like just like way above expectations. Record growth. I mean, they're growing 20%. I don't. I've trying to figure out. It's been a long time since they've grown 20%
Yeah, and they're
a
saying
year.
they're going to continue to see 20-ish%. Like that's their visibility of the business.
Yes, and record margins, peak margins. Or they didn't say peak. Sorry, record margins. Just all around good, just crazy good numbers. I'll say as somebody who likes technology, I'm really interested in applied materials. I think they do all kinds of interesting stuff. It's been years. It took me years to figure out what they did. It's very
With
complicated.
materials, no less.
That's right. Etch, deposition. All right. I think they are
Glass. Yes.
they are. I would say they're almost as valuable. Like the scarcity of what they can do. Like there aren't a lot of people who can do what they do. Almost
Yep.
to the same level of scarcity as ASML.
Yep.
Right. Um,
Agree.
they have a little bit of competition, but like in a lot of categories, they're just so far ahead. They don't. And so technologically, it's an interesting company. I'm really glad I don't cover it as a stock because it's just too scary. It's very very cyclical. Um, but good for them. They had a good quarter, right? And I will say a couple things stood out for me on their call. I was reading through the transcript, and they talked a little bit about this new project they have with Samsung. There's a few variants like this, but where they are like they're doing some joint R&D with Samsung, and what's really happening here is we're seeing a shift in how the memory companies interact with their customers, and we heard something similar with SanDisk. SanDisk talked a lot about multi-year agreements, long-term agreements, LTAs. Something similar is taking place here with Applied Materials, where companies that used to live and die by the quarter, very cyclical, are now able, because of the demand for memory, are able to change the nature of their business. And I don't know if that will stick, um, but it's an important trend to watch because historically, this whole corner of the industry has been extremely cyclical. And maybe there are structural things taking place now that will smooth some of those out. I don't know.
Yeah, I mean, let's talk about that for a second because I do I do think that there is an interesting angle. So the backstory here for anybody who doesn't follow Applied too closely is they're building a $5 billion R&D center. They're calling the Epic Center, and essentially their goal for this is twofold. Obviously, in the Samsung example, it's engage early on process, help solve problems. So as Samsung jumps to new nodes, I imagine Micron and everyone else will jump in on this as well. But as they start pushing the limits again of the angstrom era, as it's related to node transitions, density, things like that, again, new materials, as we move from organic and have to go to glass substrate where they're going to have functionality as well, they want to engage with the ecosystem as early as possible. And one of the points that they made on their call about this was that they essentially see this as a way to be designed into those
Right.
customers' processes early. Now, there's another area of this that I actually thought was really interesting, which is a little bit more on the side of just being generous, hospitality and whatnot. But a lot of research labs, so call it your Stanford Research Lab, Berkeley, Techno, Polytechs, all of those who are doing what would just say, let's say, semiconductor work, right? Design. It's very expensive for them to buy some of these materials for, again, etching and or advanced packaging or design. And so part of this center is going to be they're going to let them use that material. So the frontier universities, the those in academics who are designing, which again I think is just the long-term strategy there, this idea be close to it, be close to the heart, be close to the genesis of these process innovations, and then make AMAT's equipment be very very sticky to those. So
Right.
I really like it. I intend to go to the launch opening. I think you'll get an invite also, and we will get to see this thing. But again, it's strategic. Exactly to what you just said is if they can be designed in, which is a thing we've talked about a lot, then yes, I'm not going to debate you that things can be cyclical, but it's a little bit more sticky, I guess, is kind of the root there. So
Right. Right. And there is this moment in time where maybe these companies can like get off the cyclical
Yeah.
bullwhip.
To a degree. To a degree.
I will say that one thing their CEO said that caught my eye was he said, "I've had many discussions with our largest customers, and I think this demand for AI data centers is a significant wave. It's going to last for a long period of time." Right? I mean, that was the theme of the whole call, right? AI is huge, and that needs lots of memory, and we make tools that build memory, right? But it occurs to me that like the CEO of Applied Materials, when he says he's talking to his customers, that's like Intel and Samsung and TSMC. That's not like Google or OpenAI or let alone consumers are actually using this. And I think the risk always with semi-cap equipment companies is they're way down the tail. And so I'm glad they're doing good business. I just don't know. I just don't credit their ability to forecast it that well.
Yeah, I won't disagree with that. I mean, I will go back to I would hope that they're having conversation with, the TSMCs of the world who, as we know from their earnings call, are talking to the hyperscalers to make sure, there's
Yeah,
demand.
yeah,
But I'm with you. Again, right? Sometimes like the numbers that we're throwing out there, and we're going to talk about a few in a bit to memory that I've come across that I'm like, I don't even know how this is possible. Um, but the other thing he said, and here again, we're going to take forecasting with what it is. But he basically said, and it's not the first person to say this on the call, that they think it's possible 2026 crosses the $1 trillion mark for the semiconductor industry, which would be a good, right, 4 years before most people's that had it at 2030. That's pulling it forward by 4. If this continues, if you just look, and I was doing this numbers, if you just look at the number of the rate, by the time we get to 2030, it could very well be 2 trillion, if not higher than that, right? So what's the semiconductor industry? 40 years or something like that, right? To get to $1 trillion can double in 4 years if the cycle continues. It's just nutty. Like it's just numbers that were like, yes, I don't have to do the maths like you do, but I still freak out with some of these numbers. I'm like, what are you talking about? It's going to go from, but we will hit $1 trillion, if not this year, next year on the pace of this, because memory is it's not just shipments, it's prices. It's not like we all of a sudden can ship 2 times the number of something. We can't, but prices are going up drastically, memories, accelerator, etc. And right now, I saw this forecast, Jay, from a number of credible firms projecting that memory will be north of 500 billion in 2026 in dollar amounts, which if you put them and NVIDIA together and the accelerators, you're almost at $1 trillion. Those 2 things alone, if those numbers hold up. Jay's giving me a look, everybody.
I'm just yeah. Yes, it's big numbers. I don't know. I'm torn. I'm a fan of the semiconductor industry. I'm glad that it's doing well. I, like everybody else, we've been waiting for us to hit that $1 trillion mark for so long, right? And every year we're like, oh, it's not quite there yet. And yeah, mathematically, it seems very likely that we'll get there this year or next. But like, I, I would feel better if it were a little bit more broadly spread out. Hundreds of
Yes.
when half of it is GPUs and memory
I mean, memory.
for AI.
Right. But again, right. I mean, memory has always been the largest dollar volume by segment of the industry, which is why most people's estimates, when they say we're forecasting this, will do one that includes memory and then excludes memory. So you just look at logic. I get it, right? Memory has always been, but it's like the shortages that we're seeing just increase demand pressure so much, to the degree that Micron talked at the Wolf conference this week and did a couple of very interesting things. Number one, sort of rebutted
Rebutted.
the rebutted. There you go. The rumors that they were going to miss NVIDIA's qualification process, or just again in this be late with HBM. They sort of hit that on the head and said like, no, we're actually early with HBM4, and on time, not worried about customer qualifications. To which I will just say, even if they got zero share of NVIDIA, which I don't think it should be, if they got zero, they would still be sold out of everything they could make at the ASPs that they want, because there's that much demand for memory in everybody else not named NVIDIA making accelerate. So I wasn't even concerned about that to begin with, let alone that they're going to be right there when it comes to HBM4. But essentially, he still said, like, we're still sold out for this entire year, and hinted that next year's dynamics and demand will stay the same. And so, we knew this, right? We talked about memory multiple times coming into this year, to which I also think, off the AMAT call, like, one of the things that their CEO said, which I'm now going to label as the word of the year when it comes to earnings calls: margin expansion. Like, this is the now word of, like, every call is going to be like, which these fundamental drivers will lead us to margin expansion. He said that on the call, and I expect everyone to say that on the call, let alone the memory players who, because again, not a lot has changed in the product, but the demand shortage just means they just charge so much more. And that's where we're seeing dollar values that could go north of 500 billion for memory, because I mean, literally, it's you can almost charge right what you want, and everybody, and the impact of that, as we've seen with Apple, as we talked about. I came up with Cisco on the call later to remember, like, everybody gets hit by this bug in some capacity, and the free market's doing what the free market's doing. They can charge whatever they'll get for HBM and NAND and DRAM. It's, yes, memory madness. As we,
I will say the degree of FUD and or misinformation in the memory channels this week was off the charts. Micron's out, Micron's in, Micron's out. There's a lot of that. We're starting to hear about China again.
yeah, today, yeah,
like we haven't talked about China memory in a while, but China Chongqing memory CXMT has HBM. No idea when they're going to productize it, but it's out there. There was a lot of talk today about YMTC, which does NAND.
Yep.
It's an interesting, like, what happens in the free market when you encounter non-free market where both those companies are on the export on some version of U.S. government entity lists. Will U.S. companies start buying Chinese memory? It's so short, it's so in demand. Like, what I imagine there's going to be, I don't know. It's interesting. Like, the YMTC has really, really good NAND, and they have capacity. If I were, a Korean consumer goods maker selling into not the United States, why wouldn't I use NAND from YMTC when I can't get it anywhere else?
I mean, to be honest with you, I think anybody who sells globally and I think both of those companies, I would be a little skeptical of the HBM stuff, only because that's a little bit trickier. But the client stuff, what goes into devices, like you said, absolutely. And even if there was a rumor that they were taken off the entity list today, and then that document mysteriously disappeared. So maybe someone screwed up, or sorry, when we say today, we mean Friday, February 13th, that Jay said we're recording. Maybe they'll go back on, but 100%, if you're not shipping to the United States, like, use Chinese memory, like, where you can, especially for storage and,
this is
NAND
not legal advice.
But again, they have capacity, and if you're shipping to Europe or India or Brazil or any of those places, and you're a global OEM, I don't see why you wouldn't, right? Because your prices are about to get hit across the board,
right?
And this is the sense of that angst, that the memory bug is just biting everybody. In fact, I even saw, like, people are I know this. I mean, smartphones are already right. We're saying consensus there is off 20-ish% for the year. People are now upping their PC estimates to be 9% for the year, and I think that might be soft. I think it could be higher than that
Wait,
because of memory.
you mean they're going to fall by more than 9%?
Yes, fall by more than
Okay.
9%. I think it could hit 10 or more in an
Yeah.
ugly, and that was in fact in some of the worst PC years we've had on record were roughly 10-11% off. You're now talking about that type of category because of memory. Again, it's not the demand. Like enterprises have almost 300 million machines that can't run Windows 11. Windows 10 end of life is done. You don't get support for that anymore. Like, but the market's going to be bad because of memory. Like that's the forecast. So yeah, the memory bug bites, and it bites you hard. And the Chinese companies can save you globally, not in the United States, but globally. So for what that's worth. But yes,
Okay.
don't come after me. Don't come to my house, U.S. government. All right, let's end with two networking companies.
Three.
Oh yes, you're right. Cisco, Arista, and Astera
Astera.
Labs. So
All three
round us
companies
up.
report. So all
Yeah.
three companies report earnings this week. Cisco, it's interesting. Like people ask me a lot about Cisco. Is
Yeah.
Cisco an AI story? Is Cisco participating in AI trade?
Right.
And my response has always been, I don't think so, but maybe. And like I'll go out and I'll talk to people in the industry and I'll ask them that question, and they say the same thing. Um, Cisco, of course, a networking giant from the past that is still out there and has soldiered on because people still need big routers and they need the software and the IP that Cisco provides.
Especially on
Hasn't really,
campuses.
especially on campuses and sort of very big internet scale networks. Um, I'm not even sure about campuses anymore. Like they're, I don't know. Anyway, my
Well,
point
campus
being,
is
like,
part of their reporting. So yes.
yeah,
Yes.
but like their campus businesses, like they sell they tend to sell high powered big routers and switches,
Yeah. Yeah.
and there are some places where you just need that, and they've soldered on, but they've kind of lost the hyperscalers, right? Big all these big data centers being built. Maybe you have two Cisco routers to actually do the connection into the main internet per campus, right? So it's but in terms of like when you actually build the data center, that's like in going back and forth. Top of rack switch is not going to be from Cisco, and so are they participating? I wouldn't rule them out, but it's hard to find clear evidence that they're participating. And we saw that in the results, right? The results were fine. Like they're a little bit ahead on revenue, a little bit ahead on guidance, great. But because they really couldn't see an acceleration in their AI attach, their stock was off for the week, right? Arista, a little bit better. Arista is another story. Same thing where they actually have a pretty decent data center story, and they're seeing their numbers were a little bit better. Their stock was up for the week. Um, Again, very very hard to see how these guys stay involved long term. The internet is going to grow at what the internet's going to grow at. What is really exciting in networking today isn't switches, sort of, or isn't routers. It's things that go inside the rack to rack. That's where the really hot growth is in networking.
Yep.
And Cisco doesn't really play there. Arista kind of does, but
Yep.
very frequent topic of debate whether they're did they win this socket, did they lose that socket? Because a lot of the hyperscalers just do their own white box
Yep.
solutions, but they're there. And then Astera Labs came out with good numbers. I think I can't remember exactly how their print was, but the stock was off a lot because it wasn't good enough. And Astera Labs is definitely very much involved in the east-west inside the data center kind of
Yep.
networking. But that's a company that has some very significant wins at a small number of customers, and kind of has to deal with the vagaries of that. And so their stock is off pretty badly on the week. Um, I just because my guess is my guess is they just didn't meet expectations that were very heightened because of all the AI networking talk.
I think the angst that I could sort of sum up in kind of the conversation around these three is you alluded to it, is I think the trend is that they get designed out by everybody who's vertical, because NVIDIA is designing Arista out. That was essentially the signal that friends I was engaging with on Twitter, rightly pointed out when they made the comment that they were seeing AMD increase as a portion of their portfolio to north of 10%. But that's because NVIDIA is designing them out with NVLink, and that's a fairly negative signal, right? Their point was, well, we still see our value in XPUs and stuff that we're doing with with XAI and custom ASICs. It's fine, but this is one of those things where, again, the concern is that Microsoft, Google, Amazon, NVIDIA, and maybe even AMD, right, at some point just acquire the IP and design that out so that it is much more further optimized for their racks. And I think in all three of those names, that's kind of the, are you a merchant? Even if you're providing IP, in which case Astera is as well. Even if you're a merchant, verticalization, right, is happening within these superpods, and I think that's the concern, and that's at least what I think everyone will watch for. Is there evidence that you're getting designed out in this middleware or merchant play that these companies have? I will say the one area I have heard Cisco come up in, and this is a longer term point, is for scale across, for optical. When you're connecting data centers to data centers, that switch NIC thing is going to be robust, to use like and I've heard Cisco come up a number of times there for what it's worth. But we're not there quite yet. We're not quite. And when we are, back to my fiber point, watch for Corning, everybody, because fiber's going to get crazy. But that's, again, not quite today. But yes, the designed out, I think, is the dynamic that everybody's a little bit concerned about over the long haul, right? That's not a year point per se. That's over the next few years.
I think it's a different set of narratives. Cisco, it's a question of can they get in at all. Arista has been in the data center, and then they have this constant back and forth. Oh, they're out. Oh, they're in. Oh, they're out. They're in. And I think that's going to continue for a long time. Like there's some places where Arista, I won't get into all the details, but there's things that Arista does well. I think they're a great company. They've just it's a hard fight. They're up against some, just they have to go against TCO math, and the hyperscalers are very demanding and good at that. And I think it's testament to the fact that how good they are, that they're still in the mix for a lot of things.
Yep.
Cisco, I think, is going to have to announce something new, do something new, and we'll see if they have it in them.
Yeah. Well, I mean, they to some degree have Cisco One, which they announced this week, the 300, which is decent details on, but I agree with you.
Their switch chip.
Networking switch, yeah.
Yeah, we forget about this. Cisco makes its own chips, right? And
yeah,
they've been doing that a long time. They were the first custom ASIC customer, way before. They were in custom ASICs before custom ASICs were cool.
Yep. Yeah.
So
more on that later. But all right, thanks for listening, everybody, and I'm sure we will have more topics to talk about next week. We appreciate your time. And don't forget, the circuit will be live with the GSA on February 20th. So look for the registration link for that if you want to watch us live, and get questions thrown in with other members of the GSA. So look forward to that. And we'll talk to you later.
Thank you, everybody. Tell your friends.